Okay, recording this video after close of trade Monday, 7th of February 2011, and we continued up today, closed up at 13.1575, about 1.3 million contracts traded, but there are a lot of kind of low volume signals around, and a little bit of high average trade size, which is kind of lack of demand, no demand, kind of pushing prices up, with professional activity kind of taking profits. So let me just show you what I'm looking at on my chart. So daily chart, here's our gap up day. Today we kind of gapped up after the pre-open session, 1.3 million contracts traded. In terms of patterns, this was a profit taking pattern and a stopping volume pattern today. It's a particular subset of stopping volume patterns. If you own the better Pro-Am indicators, you'll know about this. So this is an ST star. This is just a subset. Just means there's kind of higher volume traded, lower range, and we're kind of weak closes and so on, and that's not a good sign. You can see we've had very few kind of volume patterns on the daily chart over the last 3 or 4 weeks, but this one did kind of pop up today, and I'll just show you what's coming up on my other charts as well. In terms of looking at all the other indices, very interesting what's going on. This is the Dow. So here's the Dow kind of pushing through 12,000, but look at all these Rambo patterns, no demand patterns here. We've got exhaustion buying on the upside, and all of these kind of new highs being made, you know, very weak buying and Rambo patterns here, potential reversal of amateur breakouts. Go down to the S&P chart. You'll have to ignore this last bar here, this Rambo yellow last bar, because we don't have volume data yet on the S&P. That comes a few hours after the close. But this is last week's kind of activity. All of these low volume and Rambo patterns kind of going into those highs above 1300. So again, very, very weak sign. Same thing on the Nasdaq. We can look at this. We do have real data here. So this is no demand signal, Rambo pattern, amateurs kind of active right at the highs there. So this is all, you know, not good stuff. And then look at the average trade size. You know, over the last few days at the end of last week, you know, we had all these low average trade size at these highs coming into 1300, just above 1300. But then today, you know, the average trade size kind of crept up a little bit higher, and so for me that's kind of showing, you know, a lack of public participation and kind of professionals kind of getting out and kind of handing the parcel to as many people as they can. Better X trends kind of closed the gap a little bit with the trailing stop here on a weekly chart. This trailing stop now is at 1270. That's a really important level, and it's also the level that the daily chart has come to as well. So you know, fair ways to fall before we'd you know, call a close under 1270, but you know, we've seen that type of activity kind of previously, but let's see how this kind of works out. And again, starting to see some rollover patterns in some other markets. I know bond market kind of broke down last week, and we kind of broke through the support, but just draw your attention to this. We had exhaustion selling on the downside. The professionals have kind of come back in. No supply pattern on the downside. You know, this could be a little bit of a fake out where we kind of just break below and then kind of bounce above. And so if we have a a big move down in equities, there'll be a rush back into bonds and so on. And you know, it's a potential scenario that you know, I've kind of got on my mind over the next couple of days. And this pattern is kind of replicated. This is the 30-year bonds, but it's replicated in the 5 and the 10 year kind of charts as well. A lot of professional kind of activity on the way down here, suggesting they're actually kind of accumulating rather than dumping. And then on some of the commodities, starting to see a little bit of kind of rollovers. We kind of rolled over a little bit on crude. We were kind of at 92 Rambo patterns up here at the highs. Lower and lower kind of buying activity with flush signals as we're kind of cresting through those highs. This last kind of push up into 92, and we haven't been able to go anywhere. Very weak buying at this point, and that was a fairly weak close today. And of course on the downside, this kind of level at 85 is kind of key. And then end of trend warning signal on copper up here, and you can see again the type of patterns we've got up here. A Rambo pattern, profit taking, and so on. We've had exhaustion buying up here and starting to kind of roll over. Copper's been incredibly strong, so you not. It's kind of the weakest of the rollover patterns, if you like, here. But just draw your attention. This is kind of toppy type activity, and then gold and silver are actually kind of doing a little bit of the reverse. I talked about this over the last couple of months. They kind of topped out with this almost like head and shoulders pattern, end of trend, head pattern, second shoulder. In the second shoulder, you can see amateur up bars at 1420, kind of coming into that breakout where they were kind of being told that gold was going to go to 2,500 and to buy the strength here, and of course they didn't. They did, and then the professionals kind of the next stage just got on board and sold heavily, and we kind of come back down. Now we're kind of coming back in. We've broken below this cyclical support. We're coming back to test that cyclical support. As we're doing that, this is a little bit of an amateur up bar into that turning point. Little bit more difficult in terms of activity. This was a strong kind of signal. It was an amateur kind of down bar testing the lows, and then we kind of bounce from there. So that's kind of a no supply. But if we kind of roll over and kind of touch this support area and then start to turn the other way, that would be kind of a bearish signal, and this would turn into a downtrend. So kind of breaks below the lows of the last couple of days and testing kind of 1320 would be fairly significant on the downside. And then if I just go to the silver patterns, kind of showing a similar thing. So we had our topping out pattern here, no demand Rambo right at the top here at $31. The professionals were kind of getting out on the way up, if you like. Bearish divergence signal up here. We're coming back to test up at 29, and then we've kind of come back in here again, very weak kind of amateur buying at the top here. So if we start to break below the lows of those last 2 or 3 days, this will be some kind of turning over type pattern here. And then lastly, 40,500 tip bar chart. We've kind of come into cyclical resistance at this point up here. We had professional activity right at the highs up there, no demand pattern and so on. This professional bar at the end of the day was kind of less certain as to what was going on there, whether that was kind of buying or selling into the close. But just I look at this in terms of the energy. So we've got, it kind of helps you in terms of swings of where the energy is going to be over the next few days. So over the last the second half of last week, we had, the energy was to the upside. Now it's starting to swing over to the downside. So just watching tomorrow very closely. And then the 1500 tip bar chart here, we topped out at 1320 with an end of trend warning signal on this chart, and we had professional activity coming into that highs and getting out of there. Now if this was a kind of a strong breakaway up day, we'd have closed towards the highs. This looks more like a reversal day to me, where we kind of topped out mid-morning in terms of the highs and then closed fairly weakly. We had kind of flush signals down here and bounced from there, but the bounce testing up to the 1320 level was very weak. We only got up to 1317 at the end of the day. So this looks like it's kind of rolling over to me. Personally traded poorly today, tried to take an icebreaker trade at the beginning of the day, which was kind of coinciding with this very early end of trend, and just wasn't right, didn't go my way. I was stubborn, didn't get out, got hit at my stop. And I suppose I find days like this difficult to trade, particularly when the kind of I was expecting a bit more downside movement today after last week's activity. Anyway, I hope your trading went well today. I hope tomorrow kind of goes better for me. Anyway, just be aware that we've got all of these kind of low volume and high average trade size and kind of no demand kind of patterns being made, particularly on the indices, which are really kind of concerning over the last few days. So that's the Nasdaq pattern, the Dow pattern, which is incredibly weak up there, and then the S&P 500 pattern, again very, very weak.